we have our panel discussion focused on building AI models for financial services. We're being joined by Nick Sabharwal, VP of Product at Seekr, Ale Vigilante, the Managing Director of Novarian Capital and the former Director of the FinTech Research Center at Fidelity, and Sam DiPaola, the President of Evergreen Advisors. They'll be looking at what startups need to consider as they develop AI solutions that can be successful in product development, early customer acquisition, and fundraising. I'd like to now throw it over to our moderator, Tara Coleman from One Valley, to get us started.
Thank you, Alec. I'd like to welcome our panelists and just share how personally excited I am for this panel. I've spoken to each of the panelists separately, and everyone in their own right is just a fantastic contributor to this conversation. But together, I think it's truly going to be a magical conversation. So with that, I would like to give everyone on the panel a chance to introduce themselves and their backgrounds. So if we have everyone here, Ale, I'd like to start off with you.
Yep. Thanks, Sarah. Can you hear me okay?
Yep.
Perfect. Ale Vigilante. I started my career as one of the first non-founding employee in an internet startup around 2000. Then went on to do corporate strategy in telecommunication. And one of those telco company happened to be owned by the Johnson's family, who are also the owners of Fidelity. And for the past 14 years, I've been with Fidelity, first building the enterprise scouting team worldwide, and then running FinTech research. And last year, I decided to do something different, to get out of my comfort zone, and I joined a secondary VC fund, where I am right now, Novarian.
Thanks, Ale. Nick, would you like to go next?
Yeah, that sounds great. Can you hear me okay?
Yeah.
Perfect. So I'm VP of Product at Seekr, where I lead product development, product strategy, and design. I've worked in AI for about 5 or 6 years. Worked in product at AWS AI, where I took on time series data as well as computer vision. And then at Amazon, I also led a portfolio of generative AI products spanning across Alexa, AWS, and Prime Video. Some of the focus areas were transcription, translation, text-to-speech, and generative video. Then, right as LLMs were becoming very mainstream and very interesting for companies, I spent a year consulting, helping executives to understand what LLMs were, what the value they offered was, the opportunities, and how to integrate those into roadmaps. And now I'm at Seekr, working on explainable, trustworthy AI, which I think is one of the most important and thorniest problems in AI right now, and critical to get right for finance.
Absolutely. Sam, last but not least, can you give a little overview on your background?
Yeah, but it looks like we may need a little AI to fix some video. Sam DiPaola, I'm currently president of Evergreen Advisors, which is a advisory firm and an investment bank focused on middle market and emerging businesses. So we're providing services, not only CFO outsourcing services, acting as CFO, valuation services, but we help companies realize their goals through executing capital raise and M&A transactions on their behalf. In my career, I've been an investment banker. I've worked in corporate development, and I've even been a CFO and a lead of a commercial banking operation at a large bank. So, the understanding how the impacts of automation and AI on financial services, I think I have a pretty wide view of where that can impact.
So what I love about this group specifically is the different backgrounds you all come from and the representative experiences we have at the table. We've got the institutional finance side, we have the capital side, we have the product side. So with the three of you, we're really able to paint a clear picture of what it means to be a founder building AI into their products. So I'm very excited to get into that conversation. But first, I'd like to kick us off with something a little fun. My question for you is two-part. First, what is the most exciting use of AI that you've seen in FinTech? And then two, what's an area where AI maybe hasn't quite entered into play yet, but that you think will be really game-changing once it does? And Sam, I'd like to start with you with this question.
The first use I saw of it was really automating and managing, centralizing decision underwriting at the large bank I worked with. So utilizing early stages of really machine learning, I would call it, and maybe they're analyzing and utilizing patterns to come up with good underwriting decisions. Was sort of the first interesting. Maybe it was interesting because it was the first mover of utilizing AI. I think where it could be a game changer, something that's probably near and dear to most folks doing large transactions or working with large financial institutions, is fraud detection. So being able to analyze massive amounts of transactions, detect patterns, and actually find fraud before it becomes a significant issue, and maybe stop it at it before it starts, could be a potential game changer.
Definitely. Ale or Nick, either of you really jumping at the bit to jump in as well?
I can go next. I think a really exciting application for AI in finance right now is personalized financial advice. And so taking something like an LLM and then fine-tuning it with obviously all of the different regulations, but also information about your specific products. So you have an AI model that is kind of trained on what you can offer customers, and then combining that with something like semantic search or intelligent search. So somebody could just type in something like, I want to retire in 20 years. What products could help me? And even if they aren't hitting the right keywords in their search, all of your products will be surfaced to them in a meaningful way. As far as what I think is interesting that comes next, I really think like autonomous agents are going to be a big thing. And so whether that's in like customer support interactions, and everybody is connected to the financial market more or less. And so being able to handle all those requests that are coming in without constant human in the loop intervention, or even something like what Sam was talking about on compliance and risk management and fraud detection, giving those agents more autonomy in the workflow, I think is a big next step.
Yeah. So from Sam and Nick, we've got fraud detection and customer experience. So Ale, where are you coming in?
Nick, if you're looking for a company that does what you described in terms of financial advice and so on, I got one for you. So that's an area where I think it's one of the most interesting areas. Actually, I'll go off a tangent here. I'm a productivity nerd, and I've done this sort of Mochari method of productivity. Matt Mochari is the executive coach of Sam Altman, Brian Armstrong, and so on. But you can either pay $15,000 a month and do the coaching with him, or you can actually go online and see his methodology. There's one startup that has actually implemented the Mochari method to manage email, and I'm using that startup right now. They are at seed stage. Actually, they are just raising their seed round right now, and the way I manage email has changed forever. So that's a tangential use case, but it really shows that what AI can do for you.
Ale, I'm going to ask you to send me that company after.
Yeah, it's called Fixer. FYXER.ai. Fixer.
Thanks. Awesome. Well, now that we've kind of painted the picture of what we find exciting in the financial world, I kind of want to pivot the conversation a little bit more towards all of the startups in the audience today. They're all thinking about, how do I build, sell, fundraise, all these AI products. And so I kind of want to direct the conversation into 3 sections, starting with product. So Nick, you're the most frontline rep on the panel here when it comes to the product development side. We know from earlier discussions how Seekr is especially conscious of the ethical and trust implications of AI in scenarios of highly regulated industries, especially in FinTech, as we've discussed. So I want to hear from you, what are sort of the unique technical challenges that you've found in building AI models for financial services as compared to other industries? And how can startups be better prepared to handle those challenges?
Yeah, great question. I think the unique challenge in the financial industry with AI is really the quality bar, because the cost of a mistake is so high. And I think there are implications of that. And so one is that these massive models off the shelf that have been trained on all of the data on the internet are typically trained on very popular, very available data, not necessarily accurate data. And so the vectors of hallucination are just endless there. And you could end up offering financial advice or financial services based on the opinion of some Reddit blog or tweet or who knows what. And so I think it's critical to understand the data going into your model. And at a minimum, if you're going to use those off-the-shelf models, look to fine-tune those models on a reliable data set. I think a second consideration here is understanding where your model may be hallucinating. And so those mistakes are costly. You want to detect those, and you want to get a human in the loop to remediate those. And then I think the last thing founders should be mindful of is finance is a very heavily regulated industry, and so guardrails are really important. And so not just getting the right information to train the model, but also making sure that the inference coming out of the model is staying within specific boundaries and not getting you or your customers into any trouble.
Yeah, makes sense. It is a very, sensitive industry. It's, people's livelihoods. So the risk is really high. And it kind of, what you're saying about the data sets being reliable kind of brings me back to our first conversation with Sarah Biller from FinTech Sandbox and the data that they're using to support early stage startups in this space. So it seems like there's a common thread there in all of these discussions. Ale, Sam, do you have anything else that you'd like to add on the product side?
I'd say I'll probably piggyback, Nick, on what you said in terms of regulatory, and I'll make it a matter of credibility that you understand what you are dealing with. And I usually translate that into two things. You can either attack it with badges being a broker-dealer license, an RIA license, SEC compliance, whatever that is, or you can attack it. You can attack it with people that understand that problem inside out, not just the solution. And I'll give an example of this, Tara. I recently met a company that is helping VCs like us doing due diligence on private companies. And I basically built a model that they say can basically digest all of the documents from private companies and give you the highlights and so on. However, the problem I have is that nobody at this company has ever done due diligence. Nobody has ever seen a 409 evaluation. Nobody has ever seen the bylaws of a private company, formation documents of a private company, cap table. Nobody has ever run a waterfall. And like you could have built a phenomenal technology, but you give me no trust that you understand the problem you're trying to solve. And therefore, I cannot trust the solution you are delivering, despite being technologically possibly perfect. I cannot trust it's a critical activity. So, and despite Nick not being regulated, so being in a almost totally unregulated space that the private company is investing, that to me is something that should be addressed pretty early.
Yeah, I can piggyback on that. I mean, and I think I caught the end of Pat Condo's comments on the last discussion about finding your first customer. And these solutions impact, in a lot of cases, critical processes within these large institutions that are regulated and that whose reputation depends on running high quality processes and customer interaction. So just enhancing a process or technology for technology's sake isn't necessarily going to sell the product. There needs to be a thought on ROI and truly how you're adding value to that process or to that customer interaction for all of these institutions.
It's almost like a right answer that's not explained well is kind of like a wrong answer, because you can't trust it. And so it's like on a school test, if you just write down the right answer, but you have none of the information to back it up or none of the reasoning, you actually don't really get the question right. And I think it's the same if you're trusting your financial decisions to an AI system. You want to know why it made that decision, how it made that decision, and if you can rely on it.
I love that analogy. And Sam, thank you. You gave me a great little volley to our next question, which is around kind of finding that first customer. And I want to direct this question first to Ale. We first met back when you were leading the FinTech research group at Fidelity, which was really impressive with the way Fidelity was thinking about working with startups and planning for the future of AI at the time. And as Pat and Rich touched on earlier today, securing that institutional customer partner is top of mind, and as Sam just mentioned as well. So can you talk a bit about, other than what we've just discussed, and sort of the explaining side and kind of the trustworthiness of the data and the trustworthiness of the explanation of the data, sort of how founders can better position themselves to be successful in working with large organizations like Fidelity?
Sure. So the first thing is that I think that there are three different categories of use cases, and you first need to understand in which category you fall before you decide how to approach it. The first category is you are addressing a cost center of the customer. Cost center being the RegTech that Sam was mentioning before, for instance. So KYC, AML, all of those functions. The second use case could be something that is not related to the vertical operation, but more of an horizontal function. Email management, meeting management, having the ability to schedule meetings more efficiently, looking for the right person to do a particular job based on their skills, their code base, and so on and so forth. And the third use case is you are actually addressing the profit center of the firm. So in the case of an asset manager, you're actually looking into portfolio building, into fund building, into fund management, and so on. So this is really the core of the business, the core of the business function. And the reason why I'm saying there is a different approach is that, first of all, for a cost center, the problem you have is that your solution might very well be so the ROI, Sam, that you were talking about, your solution might very well be a tenth of the cost of the current solution. Take RegTech. For RegTech, scaling is very easy. You basically hire more people, possibly offshore. Your solution is going to be applied in a non-green field environment, in a brownfield environment. Therefore, what you will need to look at is not only that your solution might cost a tenth of the current solution, but that implementing your solution implies a certain cost. At the bottom line is that this is a J curve, and the customer will not just look at your solution saves me 90% of the cost at scale. Fine, but how deep is that J curve at the beginning? So what does that implementation cost? Because if that implementation means that I need to spend 2 years implementing your solution, and at the same time keeping the cost base that I have with all of that offshore RegTech people, then it's not saving me anything. Before I see the savings, it will take a while for the J curve to hit the x-axis again. For a profit center, the story is similar, but with a different angle. The J curve is not really about the cost, but it's more about the culture of the firm. Take an asset manager that is putting on a pedestal active fund managers takes forever to implement passive index funds because they believe in something totally different. You show up with an AI that can actually perform the same job. You go against the very culture of the firm. So the problem you have there then is that you need to decide, how am I going to approach this market? One way is to become a total substitute of that fund manager. So Nick, the company I was mentioning before is called StreetBeat. StreetBeat, for instance, allows you to actually build with natural language to build your own portfolio. How much does a fund manager want to see this solution being put in front of investor? Absolutely zero. So what you need to decide is, am I actually going to go in that direction, or am I rather going to reframe this solution as a co-pilot for the fund manager himself? Therefore, I do not go against the cultural current of the firm, but I actually help that culture evolve towards the vision that I have. That's about it. I could go on and on, but that's my idea.
Yeah, no, it's really interesting. And things that maybe not be top of mind for a startup. It's like, well, I have this solution for you. I'm going to save you all of this money. But to your point, the cost of getting to that point may kind of outweigh the benefit of reaching, point B.
Especially for somebody who's managing a cost center, basically whose mandate is reduce cost. take all the light bulbs and make them LED. Sure, but LEDs cost 10 times as much. How am I going to do that?
Yeah. Nick and Sam, any quick remarks as well on the customer acquisition side? I'd like to get into fundraising next.
I love everything Ali said. I think and like just getting specific about the problem you're trying to solve. And especially with a big customer like Fidelity, like the best way to grow with that customer is to solve a very specific problem for them, understand kind of how their financial incentives work, and then use that to sort of sell further into the business. And so like 5 questions I always use that I make sure I am like crystal clear on: just who's your customer, what's the problem they're trying to solve, how are they solving it today, what are you proposing, and why is it better? And so I think if you go through those, you're in pretty good shape with any customer, but especially a big sophisticated customer like Fidelity who really knows their business.
Yeah, I go back a little bit to a successful business that I saw that solved a problem because the problem was developing and new. It was around managing HSA accounts. It was essentially a payroll deduction problem and then a transaction problem, along with managing the assets of various HSA accounts. And the specific solution around that allowed the company to penetrate into very large organizations. Their initial customers were Fortune 500 businesses. And from there, once they got into the HR department and the finance department, because it was payroll management, they were able to offer other solutions that were more mission critical to the business. So, finding a path in, finding that gap, where the customer has a true need they can't solve, which may not be a mission critical element, gain the trust, and then expand the offering seemed to be a good strategy.
Yeah, absolutely. The sort of land and expand model. Awesome. So I want to transition briefly over to fundraising. It's the first question we get from founders, as I'm sure you can imagine. So for the companies that are thinking, how am I going to raise my next round? How am I going to exit? What's the future of my business from a funding and an exit perspective? What advice would you give FinTech founders here today as it relates to that question? And so Nick, why don't we kick it off with you?
Yeah, I think just make it interesting for them. And so really highlight the things they care about. And so a strong vision and a strong pitch. Make sure you're talking about how big the addressable market is. If you're building financial software for companies who make custom notebooks, it's not a big enough of a market potentially for a VC to get excited who wants a 10x or 100x return. And then just make sure you understand your unit economics, like how much a customer's worth to you, how much it costs you to acquire that customer, so you can prove that the business will scale. Lean into the strength of your team. It's something that investors care deeply about. It's really what they're investing in a lot of cases. And so highlight your team. Don't be shy about that, and have a very clear plan for what you're going to do with the money. And take that obligation of raising a bunch of debt or selling some of your equity and having a partner, take that very seriously.
Sam and Ale, I'd like to, same question to you, building off of what Nick said, but also with the lens of how is AI going to change the way you both are sourcing deals in terms of the companies you're investing in, the volume that you invest. So two-part question for both of you. How can startups prepare themselves and think more about funding? And then also, how is AI going to change the way that you invest? So Sam, why don't we start with you?
Yeah, so I think there's various stages of fundraising, right? And I think Nick is on point. You got to have your message, especially at the early stage, seed round financing, have your pitch, sell your people, know your solution. But that is more, I don't see how it's going to be difficult for maybe getting the message out and having angel investors be able to sift through more opportunities just to meet initial criteria at the seed level. When you get into your when you start revenue production, you get into A round and the later rounds, having quality financials, a quality presentation about the scalability of the business and the return potential of the business really helps at that level. So whether that is an accountant or having an outside professional prepare those not only financials but pro formas moving forward, so that folks can analyze whether or not that opportunity fits their return models and needs for their specific fund. And how AI obviously is going to impact that is if that data is available and that data is of quality, it will allow investors to sift through more opportunities and pick those that really fit their return goals and their return models.
Mm-hmm.
It could really enhance the start to fund process, especially in those more strategic A rounds and above, it being AI.
Yeah, absolutely. Ale, anything you'd like to
First I'd like to add what Nick said in terms of the looking for funding. And I can think of 4 things. The first one is show that you understand the problem. Show that you really deeply understand the problem you're solving. Second, show that you have a superior solution for that problem, because you're digitizing something that was manual, because you're speeding up something that is typically slow, because you're substituting a human with whatever. The third one is show how you're going to make this profitable. Show the attention to the economics. Nick, you were talking about this as well, but this is particularly important in this environment. The fourth one, and this might not be popular with founders, don't get too greedy about valuation too early. Somebody that comes in and gives you a phenomenal valuation for your early stage company, you are creating yourself a problem for all future stages. Because when you're going to raise again, I'm not sure you're going to find another VC that is so. You see where I'm going with this. You want to avoid the down round at all costs, basically, or a flat round at all costs, and you don't do that afterwards. You need to think about it now. Then, when it comes to managing the deal flow, Tara, I actively use actually AI in 2 ways. The first one is in building my investment thesis. I actually have a ghost reader that so I use the Readwise app, Readwise as a reader, and the reader as a ghost reader embedded into it. So anything that is interesting for me, I have on my RSS feed on Readwise, and everything that I save from my RSS feed is summarized by the ghost reader. So digesting everything that I want to read today, it takes me today probably a fifth of the time that it used to take me a year ago. The second thing is that I use I do use some tools, whether it's ChatGPT or I use an app called Obsidian that can basically build is integrated with ChatGPT and so on. But when I do due diligence or when I start building the investment memo, the investment thesis for a particular company, I use AI to basically make that very much faster. So if I want to know what is the credit score distribution of American people, today I can just ask that question and get that question answered immediately. In the past, so what would have taken me probably 5 minutes in the past now takes me 30 seconds just because of AI. Those 2 things I do today. The selection of the companies, no, not yet. Yeah. I have a friend who does that though. I have a friend who actually built an entire AI stack in the RVC firm to do the company selection, the first reach out to the company, and the scheduling of the first meeting. That's pretty impressive.
Definitely. I'm curious to know how that, how the longevity of that looks for your friend and if it impacts their return too.
Yeah, same.
Well, thank you all. We're unfortunately up on time. I have so many more questions for you, and I feel like I could stay here forever, but I really appreciate all 3 of you contributing your time and your insights. And I've enjoyed the conversation. I hope you all have, and I hope the audience has as well.
Yeah, thank you for having us.
Thank you.
Thanks. Thank you so much.
Thanks, everyone.